Hi, welcome to Cryptoacade, and in this video we are going to get you started with technical analysis in cryptocurrency. Now, in order to do so, we need to start off and discuss what is technical analysis. Then we'll cover why technical analysis works, and the most important million-dollar question of the day is, will technical analysis work in the cryptocurrency market, which is relatively new? So let's begin. What is technical analysis? Technical analysis is a trading discipline where you go out, you evaluate investments, you're identifying price trends, and you are looking for trading opportunities based on the charting history. Here we're taking a look at a price chart for Bitcoin, and when we are doing technical analysis, we can go out and we can identify areas to buy and sell based on the patterns within the chart. And there's always going to be several different patterns going on, and it's easy to become an expert on some of these patterns. So for example, this first line I drew was an uptrend, and we could see where price has come back and retested this uptrend on multiple occasions. Eventually it broke through, came back and retested the bottom side of this trend line. So the market thinks that this trend line is important, and we can use that to help identify the trend of the market and buy and sell signals. The secondary line, this horizontal line, is another way we can identify buy and sell zones. Price came down, found support where it no longer sold off, began to rally, came back to that same level, has rallied again. And so we can identify and use these types of markers on a price chart to help us identify when to get into and when to get out of a trade. So that's essentially what technical analysis is. You're reviewing the charts, you're looking for patterns, you're identifying trends, and you're identifying potential turning points within the market. So technical analysis is just one way to review the market. There's other ways that you can analyze the market, and that is using another form of analysis called fundamental analysis. And to help bring this illustration to life, let's take a look at Tesla's stock. Okay, fundamental analysis is going to be looking at the balance sheet, the income statement for Tesla, which is what these two windows are towards the bottom. We've got total current assets for Tesla. We've got total revenue for Tesla. And the earnings, and what kind of product do they have? What kind of market share does Tesla have? Those are all the things that are going to go into fundamental analysis. And it has different data and figures associated with it. So when you're looking at crypto and fundamental analysis on crypto, you're going to look at things. Well, there could be a lot of things involved, but for example, here we're taking a look at what is called the market cap of Bitcoin. Now this just simply tells us how large Bitcoin is. And at the time of this video, Bitcoin was valued, the total Bitcoin market was valued at over $1 trillion. It's a huge market. And so you're looking at things like, what is the market cap of a crypto? Or here's another interesting data point that some analysts will look at, is what is the dominance of Bitcoin within the whole cryptocurrency market. That's this Bitcoin dominance chart. Bitcoin was the first cryptocurrency, and it is by far the largest. And so a lot of analysts will look to see if Bitcoin's trend is going to continue towards strength, or if other cryptocurrencies other than Bitcoin, those are called altcoins, whether these altcoins might be in an uptrend. They will look at this Bitcoin dominance chart. Now, those are various theories, different ways of looking at it. I'm not saying that those are good ways of looking at it, but these are different styles of analysis that can be done. And within fundamental analysis, you're going to be looking at certain things like how many addresses, how many Bitcoin wallets there are out there. And the more people that are using Bitcoin, the stronger the value of the underlying cryptocurrency may be, plus in addition to all the appetite and institutional demand. So that's fundamental analysis. Fundamental analysis is looking at different things. It helps give you a sense of the larger picture. Fundamental analysis is telling you a story about Bitcoin, or if you're looking at Tesla's fundamentals, telling you a story about Tesla. Now, an interesting thing about Bitcoin. So if we were to compare Bitcoin, if it were a single share stock, Apple is huge out there. Apple is worth over $2.3 trillion. You got Microsoft at $2.2 trillion. So Bitcoin would show up here in between Amazon and Facebook. So it would be the 5th largest stock if it were a single share stock. Now it's not, but just to use that as a comparison and think about a lot of the investment that and focus that people put into single shares and the stock market. Well, Bitcoin would be the 5th largest at the time of this video was created. So it is absolutely huge, and that helps give it an advantage on why technical analysis works. So let's move into the next section on why technical analysis works. And to go back to this fundamental and technical, the difference between those types of analysis, fundamentals, remember, tell you a story about what's going on within the market. And the price doesn't always follow that story. Have you ever noticed if you're looking at an earnings release for Tesla and the earnings comes out, it appears to be really good on Tesla or another stock, and then the price of the stock drops? Okay, so the price does not always match the fundamental analysis. There could be fantastic fundamentals, but the price may still fall. Well, when you're looking at a technical analysis, you're looking at the actual price movements on the chart. So if there is a downtrend coming, you will notice it on the chart first, and sometimes the news will follow what you see on the price chart. So technical analysis works because you're actually following the price. You're looking at various patterns and using those patterns to help identify those entry and exit points. And so that's the big difference. Fundamentals tell you the story, but they don't get you into the trade. They don't tell you where to enter or where to exit. Technicals, you're actually looking at specific price points and deciding where to enter and where to exit. So one thing I notice when I'm looking at this chart is we've got a line coming across here. So let me delete this. Okay, so from a technical analysis perspective, this line is formed from a previous swing high. It then broke up above this swing high, came back, retested it from the top side, then broke down below it, retested it from the bottom side once, retested it from the bottom side twice, broke back up above, and then has come back and retested it again from the top side. So if an analyst, a technical analyst, were to have noticed this horizontal trend line on Bitcoin, they could have used it as an opportunity to buy and sell or create some analysis off of it. And that's the benefit of why technical analysis works, because it actually helps you get into and out of those trends. So let's move in to the next section and answer the question, does technical analysis work in crypto? And this one is a debated topic. I believe it is wholeheartedly yes, technical analysis works in crypto. And the reason that it works is that you need a healthy balance of bullish and bearish sentiment in order for technical analysis to work. You need that push-pull, that struggle between the buyers and the sellers. And crypto, in my opinion, is perfect for technical analysis. And that's because it's relatively new and there's a limited view on how it should be valued. If we come back, we take a look at, again, take a look at Tesla. You do a Google search for Tesla, you'll probably find several analysts that say, oh, the value of Tesla should be $1,000 per share because of, this and that and this cash flow and yada, yada, yada. There's various valuation models that analysts can use when you're looking at a more traditional market like the stock market. But when you come back and you take a look at Bitcoin or other cryptocurrencies, because it's relatively new, there are no established valuation models out there. And so you have this struggle, and that's what creates this struggle between the bulls and the bears. You have those people that are hyper bullish and think that Bitcoin is going to be valued at $1 million per coin. And then you have those people who think that Bitcoin is worthless and not worth anything. And it's that dichotomy between those bulls and the bears is where technical analysis works. And so it's helpful to have skeptics. And you can come out, read the chart, which will teach you how over the next few videos. The larger the markets are, then the more buyers and sellers you're going to have in them. And crypto is a fantastic market for this. I already mentioned how Bitcoin is valued at over $1 trillion. So here we're taking a look at a website called coinmarketcap.com, and Bitcoin is worth over $1 trillion via market cap. Ethereum is the second largest. That's 400 billion. Huge, still a large market. Cardano, 70 billion. Okay, if we take a look here at the top 10, Dogecoin, one of people's favorites, that's 30 billion. It's worth 30 billion. If we scroll on down here, your top 20 is worth 10 billion. These are still very large companies. If you drew the line near 5 billion, you're talking the top 35 cryptocurrencies. If you wanted to draw the line at even 2 billion, 2 billion is still a large one. You're still talking the top 60 cryptocurrencies in the market. So there's a lot of opportunities to take a look at cryptocurrencies, implement technical analysis on them, and it's going to work because they are large markets and they're growing every day. And technical analysis works when you have this push-pull between buyers and sellers, and that makes cryptocurrency an excellent market to trade in them. So I hope you like this video. We will see you in the next video.